had this head and shoulders over here, right? Beautiful head and shoulders. There's your $65,000 high. Here was your neckline. You can see this high pivot connects perfectly through this low. Yeah, so there's definitely a correlation, and the correlation happens to be liquidity and margin, right? So what you're seeing now is a market in terms of the stock market that's been overinflated, increased by the Federal Reserve exponentially in terms of valuations and just so much money flow. And part of that has gone into cryptocurrencies. So what ends up happening is that when you have a pullback in the stock market, there's a certain amount of margin contraction, meaning that people are borrowing X amount of dollars. When they lose it in their stock portfolios, they have to cover it via another avenue. And that avenue can oftentimes be cryptocurrency. So you'll see usually a connected move here where, in my opinion, the deleveraging that will continue in this market will actually drive Bitcoin down a decent amount in the coming months.
Wow. So let's check your worst case scenario. We have the deadline on government, the ceiling raise on October 18th. Let's imagine that they fail to raise it by October 18. There's a huge crash on S&P markets. What are the odds that you think this will happen, and what should happen to Bitcoin and cryptos in this case?
Yeah, so in general, almost every couple years we see kind of this issue with the debt ceiling where Republicans versus Democrats go back and forth. And what ends up happening is generally at the 11th hour, there's a deal struck to at least extend the amount prior to the default. So I'd be very surprised if we did default as a country in the US. What usually goes on, again, and this is kind of common sense, but it's like, no political party wants to be the party that collapsed the US and caused a default, right? So right now, the prior administration was Trump, and the Democrats were kind of saying, oh, we don't want to, let you, inflate the budget anymore. And now it's the other way around with Biden, and the Republicans are saying it. But again, neither side wants to be known as the one that collapsed the whole country via a default. So I think that overall, that's going to turn out to be somewhat of a non-event. But I do think that there are issues out there that will continue to trickle through. Like we're seeing the stock market beginning a major rollover. Now, for a lot of people in crypto, that may not seem like a big deal. But if you go back to my prior statement in regards to how much liquidity and margin is in the system right now, any sort of contraction in the stock market inevitably will cause a contraction in cryptocurrency. Now, let's frame this, right? So I'm a huge long-term bull on cryptocurrency. I see 100,000, then 500,000, eventually rivaling the market cap of gold. But you do have to flush out a lot of this kind of weak money that's been just slowly accumulating, thinking the markets can never go down. It's always going to be new all-time highs. And that's what I'm concerned with. And in fact, if you guys don't mind, I'd love to show the chart here. Let me bring up my chart. Yeah. On Bitcoin. So Bitcoin, the chart of Bitcoin is an absolute thing of beauty. It actually is behaving exactly like a technical chart should. So you had this head and shoulders over here, right? Beautiful head and shoulders. There's your $65,000 high. Here was your neckline. You can see this high pivot connects perfectly through this low, When this broke, this was a breakdown, right? And we saw a major collapse to the 30,000 marker. Then Bitcoin started to trade between 30 and 40,000. You could see up and down here, up and down, eventually breaking through this 40,000 level and going back to this same trend line, which we refer to as the neckline, and retesting it. That's very normal for a chart to do. The problem is that's epic resistance. That is like the A-league of resistance levels. And sure enough, instantaneously, we saw Bitcoin hit and collapse down to about 43,000 from 53,000. You then come back to this level, right? So over here, it was resistance right here, resistance, finally broke through. Now it's support. So in the very short term, Bitcoin, it's imperative that Bitcoin holds this 40,000 level. If it doesn't hold 40,000, then you're going to start trading in this 30 to 40 range, which it was in prior. And I do worry that, again, at some point you will see a breakdown below 30,000. My ultimate downside target is 18 to 20,000. And again, I think that coincides with deleveraging. And again, just to remind everyone, I have a huge long-term upside target on Bitcoin. I just think you have to wash out a lot of this kind of weak-handed money.
So you say you're more short-term bearish, long-term bullish then?
Yeah, short-term bearish. Again, it's one of those things where you've created so much. The Fed has been pumping in $120 billion a month into the system. Inevitably, some of that goes into cryptocurrencies. banks have been so lenient on giving loans. Margin rates have fallen. I mean, I think at Interactive Brokers, you pay 1% on margin on loans more than $1 million. Now that's stocks. Again, I don't know what the margin rates are on cryptocurrency, but there's this kind of excess liquidity in the overall system that you need to flush out. It's kind of what happened in 2007 going into the financial collapse, where these banks were just making ridiculous loans. And then you had this credit contraction where all of a sudden the collapse occurred and it washed a lot of that money out of the system. It kind of reset, if you will. And then, of course, the Fed comes in and just prints trillions of dollars again. That's their deal. They just want to reinflate the system. But I do worry that you have to go through this type of thing in the near future.
And so with that in mind, like where do you see the markets right now? Are we still in this bullish cycle? What are you kind of seeing?
So according to the charts, right, we technically made the cycle high at the 65,000 marker. And again, one of the cool charts I want to show you guys here is a chart from 2013, right? So if we bring up the 2013 Bitcoin move, now there's a lot of debate whether or not this is the high pivot, and I understand that, but based on what I do is strictly charts, right? So it's all probabilities. And what we can see here is that in 2013, we ran up to 1,250, then we corrected to approximately 500. You then had this mega-sized bounce back to 1,100, before collapsing down to 100. So now compare that to what we've seen recently. We saw a run up to 65,000, which would be approximately this 1250 high equivalent. Then the collapse to 30,000, we'll call that the 500. Then the move back to 53,000, which in 2013 was 1,100, which leads me to believe that we're on the verge of this flush down in cryptocurrency to this, again, it would probably be the 20,000 retrace to the 2017 highs, give or take. Going to the 2017 cycle, here you have the same pattern replicating, right? So the big run up to 20,000, a massive correction, again, the 30,000 drop that we saw off of that breakdown, and then a retrace to 17, and then a move down to 3,000 to 5,000, give or take. Now, one of the reasons why, to me, this kind of speaks to being a cycle is because if you look at the cycles, all the Bitcoin cycles are in 4 years, right? So Bitcoin came to market in 2009, right? So then you have 4 years until the high in 2013, then 4 more years until the high in 2017. And then if we add 4 years, it brings us to 2021, which is where we currently are, which if the cycles will repeat in terms of 4-year cycles, that should be the high. Now, could we technically make a higher high later this year? Yeah, it's still 2021, so it is a possibility. But again, that seems a little far-fetched as we start to see the stock market decline and some of the liquidity kind of dry up.
You had mentioned that you don't think that the debt ceiling thing is going to be a big issue. What about interest rates? Like, are we ever going to be able to raise interest rates? And what do you think will happen when that does happen?
That's a great question. I mean, so interest rates are a tricky scenario. The global picture wants to push them up, and then they have the Fed fighting against them, right? Right now, the Fed is okay with interest rates going up a little, but the problem is, as the U.S. debt expands, we literally as a country cannot allow interest rates to get too high, or we can't service our debt, and we will be forced to default anyways. And that's kind of my long-term bull case for Bitcoin, where I actually see that at some point, the global picture is the countries around the world are going to say, hey, listen, we're not going to lend you any more money because we don't think you're ever going to pay us back unless you pay us X high amount of interest. Obviously, we can't do that as a country. Eventually, you have this kind of meteoric dollar collapse. And from the dust, I think that cryptocurrency side of things really rises. I actually think the Federal Reserve will no longer be around when that happens. They'll be the scapegoat for what's going to come on. So it's a really interesting period we're coming into. Cryptocurrency was born out of the financial crisis in 2009, and it really has a huge place in the future because the people will demand that you can't allow a government to just run up crazy debt, which, remember, it's our tax dollars. In reality, it's me and you and everyone. We owe that money. Eventually it's either our taxes go up or we default and the economy crumbles, one or the other. And the same thing for the Federal Reserve. How do we allow a body to just say, hey, we're just going to save the day every time a little hiccup comes in, and we're going to just print and throw trillions of dollars into the system? Inevitably, that can't survive, right? We can't be the outcome that lasts forever. And there has to be a reset. And that's, again, where crypto comes in.